So this ends the presentation part of the webinar. And now our panelists are available to answer any of your questions. We'll route your questions to the appropriate panelist, unless you specifically want to ask someone a specific question. First and foremost, is capital preservation. Investors want to make sure that they want the return of their capital before the return on their capital. So if an accredited investor has several $100,000 that they want to invest in the fund and take advantage of all the positive market signals that are lighting up throughout the Lehigh Valley that was just presented, and take advantage of several of these great opportunities. From an asset allocation perspective, what type of asset classes would be the bread and butter per se that the capital will be deployed into in order to generate the preferred and target returns?
Yeah, John, for that?
Yeah, let me just say that there was probably more of a tried and true answer to that question up until about February of this year. You may or may not know Warren Buffett lost $50 billion in the quarter, and I would say that again, different kind of market. But so from a asset capital preservation standpoint, I think one of the most, and Jeff, you can join in here, but one of the best capital preservation protection is not being able to sell on every whim or stock market increase, decrease, on every economic number that comes out, and being able to weather the storm by doing nothing but maintaining your investments. And the investment in the fund is a long-term investment. There is a lockup period, which you'll read in the PPM. But as you noted, and I'll use the stock market as an example because it's probably the most liquid the markets that we read about, took a dip from roughly 2,900, that down to 29,000, down to 18,000. A lot of people panicked. A lot of people sold their stock, and now it's back up to 27,000. So real estate is a completely different animal, and I'm not going to sit here and say that if you had an investment in a hotel property, that the value of that property today is different than it was before COVID-19. But it's not something that, from a standpoint of the fund, that we would look to sell. But we would look to possibly buy and take advantage and be opportunistic, as Kate just said. And so capital preservation is an ongoing process, an allocation process. As you may want to know, we weren't affected by the virus. We are, because we did not launch the fund before. And so in terms of still acquiring assets with all the information that we have now on people's habits, helps us to maintain. Having said that, these what they call black swan events are difficult to predict. Having said that, real estate is traditionally an investment area where you can buy and hold, you can restructure, and preserve that capital. Jeff, do you have anything to add?
Yeah, on the lending side, we've put a number of policies and procedures in place, and we lend at 65% loan to value based on an after rehab appraisal. So we get all these projects appraised based on the scope of work, the construction estimate, and we want to know what they're going to be worth when they're finished. And we typically lend at 65%, in some cases 70% for better borrowers, but generally 65 is our target. We also want the borrower to put 10% in of their own money. We want to make sure we're dealing with qualified borrowers, so we get their credit histories, we look at their bank statements, we get their financial statements, tax returns, and we do a cash flow on them. We want to know what their real estate experience is. So we have a number of things in place to make sure that, one, we've got a good borrower, and two, we've got a good project. And so we think that that has been working very well in our favor over the last 10 years. It has really eliminated some of the issues that hard money lending has in terms of these properties and these borrowers just kind of walking away. Pretty rare for that to happen in our portfolio. In fact, we've never had anybody walk away from a project. In 10 years and 380 projects, we've only ever taken 2 back.
You say never?
And we've only taken 2 back in 10 years. About 380.
I'll jump in too. So, he said 2 things, borrower and projects. So we are trying to get borrowers into our fund, well, investors, right? So that we can take the money and deploy it into the market. Project wise, 4 units to 20 units, that's our specialty in the Lehigh Valley. And I was previously in the hotel world, so anything up to 200 units in this market, I can safely say, we don't really look at anything in the 3 and lower range, but we have a really good reputation. And, we've really kind of, I wouldn't say cornered the market, but we have a good grasp on the inventory that we're looking for. So my goal is to bring in as many pieces to look at that we can take under control and make sure we return a strong in investment rate too.
Thank you. I think that answers that question. It sounds like everything you just said, it sounds like a solid risk management portfolio plan across the board. Okay, so we are coming to the end of the webinar. This next slide, as promised from the very beginning, and also I've posted in the chat box to the right of the screen. This is how to get in touch with David, Tejas, Jeff, and John, and also myself. Just give you a few seconds to jot this down. This video, we also mentioned, will be on our website and posted throughout social media. Perfect. So that wraps it up. We at Real Estate Investor MBA want to thank all our panelists for sharing their expertise and information with everyone today. Remember, we'll be having another webinar on Friday, August 21st from 4 to 5. And the new series, this will be Investment Series Part 2, How to 1031 Exchange Real Estate right here in the Lehigh Valley. So if you want to join and haven't signed up, please do so. We'll be sending out links for that webinar later this week. And if you also know anyone or other accredited investors who are interested, just let them know to look out for the invite. Hope you have a great day.